And sometimes when I like to see that on these massive volume stocks, especially when it's that high day, because then that's going to get a lot of people to sell and a lot of shorts to join it. And there's just so much volume that you need to understand that volume overpowers everything. So that's kind of why I thought there would be some squeeze over two, because a lot of longs are thinking, I want to sell this at two. A lot of shorts are thinking it's up too much.
All right, everybody, welcome back to This Week in Steady Trade. We have no special guests this week. It's just your three favorite hosts here. Before we dive into some charts, we're going to do just our weekly roundtable on how our week's been going. We haven't done this in probably 2 weeks because of the special guests we've had on. So let's just give everyone an update on how we're doing so far. We're about halfway through June. We're recording this on the 17th. How have your first 2 weeks been, Kyle? And then we'll pass it along to Jack. What do you see in the market changing? What's up?
So considering the last week or so, I think last Thursday, Friday, and even Monday and Tuesday, I thought we were actually going to enter the summer trading. I thought I took a nap every day. I was catching up on my sleep. I wasn't brain fried. I was feeling good. A lot of small wins. Didn't even trade Thursday, I think, last week or Friday, or one trade Friday. And then all of a sudden into the close yesterday. And then today, we have all these runners are back. So maybe it was another small 2, 3, 4 day break and we're back to this insane market. Today was the best day of the week so far, locked in about $4,000. So really happy to see it coming back, but hopefully we don't get too insane. I don't want to get sleep deprived again, but I'm glad we're back. We're running.
Yeah, I agree with Kyle. The last 4 trading days before today were pretty slow for me. Just locking in small singles, had a break-even day, and there just wasn't much opportunity. Took a little bit of yesterday off, probably 2 or 3 hours. I didn't look at all, which is a big thing for me. But yeah, today right back on the horse. Insane opportunity. It's one of those days where it's just too much going on for me to track all the stuff that I trade or I have an edge in, where I lose track of plays because I like to focus on what I think I have the best edge on, and that's kind of what you have to do on busy days, is just figure out what's going to offer you the best risk reward and the play that you most understand and you are most convicted in, when there's just so much opportunity out there. But we'll see what happens for the rest of the month. It's probably just going to putter opportunity like this. We'll see. I'm thinking we need at least 2 weeks of no plays, and then I'm going to start considering a summer trading. But doing really good this month, best month ever once again, and it's just really small losses and just insane gains on these A+ setups. So just looking to finish it out here strong and consistently.
Yeah, awesome. Not to sound like a broken record, but definitely agree. Thursday, Friday, Monday, Tuesday, for me, I was oh, it's slowing down, might be entering summer trading. So, I wired money out of my account, and then today happened, and today was probably my best day the last 2 weeks, I think. I don't know. It's crazy. I'm going to talk about some of the plays coming up, but really sweet about that. And, yeah, because of today, it's now my best month ever. With Jack, I passed last month, which is absolutely nuts.
There you go.
So pretty pumped about
awesome.
that. Yeah. So, Kyle, let's jump right in here. Let's go over some charts.
So this is INVVY, and we talked about this stock a few twist episodes ago. I think this play happened 3 weeks ago when it went parabolic to 40, and me and Kyle had a huge trade on it. And like I was saying, I was comparing it to NMHLY, same kind of ticker, had the 3-day run and just the absolute unwind. And then I said I would be watching for the second move, and that's what happened today and yesterday. We got that first green day yesterday, and I actually hadn't even seen the stock till after hours yesterday. So I kind of saw it, and I was solid first green day, kind of going sideways into the close over VWAP. So it was immediately on my watch list because I know they like to run these stocks for 3 days. And out of the open, I was watching for it to hold green to red and then have a morning spike. And that's when I first started trading it. I got long some shares around 11 and absolutely just sold it way too soon. I think I was already selling mid-12s, and I was probably all out by 14. And then when it kept going up, I started to queue up the short because now, we're going parabolic from 11 to 20. And I put a small position on around 16. And then the next candle around there 20, that's where I put most of my size on, and we just got a nice washout, and we just covered into the VWAP support and kind of moved on from that. And then I was watching it and it was consolidating perfectly into the 17 support. And then I got long again, risking, the VWAP-ish area, and got another beautiful rip to sell my long into and then go short again. And just really taking advantage of this amazing range that the stock offered, where it's going down $5 a share in one candle. You don't need a lot of shares to make money on the stock. Just trading even 100 shares on the stock can really yield you a pretty massive return if you are, nailing the tops and the bottoms, using the level 2 and the tape to guide you for your entries and your exits, and use the chart for resistance and support to kind of have a guide on where you think you need to be watching level 2 into the support and resistance. And then you got one more trade on it when it snapped $20. I shorted it near the VWAP area and kind of just faded it down using that very clear trend line there, guys. Do you see that? How the stock just trended all the way down, and then once it popped over the trend line, that's where I covered and called it a day on it. And since it has 2 green days now I will be watching to see what it does tomorrow. It's probably my main watch. So it's only ran 2 days, but it does have overhead resistance, and it did have pretty massive volume and close weak today. So tomorrow, if it does go red, I'll be joining that for shorts and looking for a panic, maybe down to the $10 support area. Or if it does gap up, I probably would be a little bit hesitant to buy long out of the gate. But if it does, parabolic, $10 share, I will look to be shorting that for a pullback. And I'm just going to kind of react to what the stock does and let the stock tell me where I'm going to put my trades on.
Well said.
I love it.
I was going to say, you mentioned letting the tape and level 2 guide you in the trades. Could you just expand on that more? Like, what exactly are you looking for? Big size, hidden sellers, for you personally, for entries and exits?
So for this stock and other stocks, really the main thing that you start to get an eye for is the stalls. So when you're looking for panic dip buys, parabolic shorts, you really need to be looking for, on the way up, it's a very aggressive tape. The velocity of the tape, there's prints hitting very quickly, very quickly, very quickly. And then once you see the tape kind of start to slow down and it's kind of starts to lean, you can't hesitate. And I've just seen it so many times that that's kind of where I enter when it starts to stall. You can kind of feel the momentum running out of the stock. And then once it runs out, when it starts to go down, everybody's going to panic sell, or once it, stops going down and starts going up, that's then when everyone's going to panic buy. So just being a little bit ahead of the crowd, you can get a great entry and then you're immediately up on your position. And those are my personal favorite trades, is when you enter the stock and you're risking around that break-even area, and you're going to get paid immediately or you're not going to get paid. And that's really just how I like to compound my gains throughout the day, is just very minimal risk, and just joining the names that are going to pay me and not fighting them. So that's what I got.
Yeah, I love it. I love this ticker, because if you go back, 20 and 25 were both the main tops today. And I'm pretty sure those were key resistance levels from last run. If we look here, it topped at 20 last parabolic, right in this run. And then it actually bottomed at 25 after the main parabolic. So, this is where it's really valuable. If you've been watching tickers and they come back into play, and you've been watching them last time they ran, you all of a sudden have all these key numbers in your head from last time. So it was very, the first time was predictable. This time was just as predictable, because not only was the price action the same because it's the same kind of stock, but also we already had these key levels in mind of 20, 25 that were, going to have bag holders and resistance from the past run. So just another great mover. And like, I agree with Jack, first red day it's still on its way, still could come either tomorrow or Thursday, or Friday. So that'll be certainly a play we're going to be watching. So next, UONEK. This was, I don't even know if you'd call it sympathy with UONE, because they're both the same company, just different, different types of stock, some different voting rights or et cetera. But I only made $400 on this stock today. I kind of royally screwed it up. I could partly blame because I was so distracted with INVVY that I really wasn't focusing too much attention on it. But this particular kind of play is not the first red day I like to see, right? And mainly because it had such a large gap up, right? When you gap up, at $7 and it previously closed at 275, the odds of it going red are just incredibly slim. The fact that it actually did go red late day actually incredibly surprises me. It's very rare that stocks like this do this unless there's extreme dilution, which this stock might have. I haven't looked at the financials to know, but essentially I kind of missed this first key bounce to short into because I was too busy watching INVVY. But once we started getting this bounce right here, I did get getting short, but I was just getting very emotional about it. I felt like I should have had a much higher entry here. And so once we started squeezing kind of back over 6 into this bounce, I actually covered some and realized a small loss. And I knew immediately when I covered, I was like, all right, that's a mistake, Kyle. Like that wasn't a key level. You're still in review app. You're still under, the double top here at 680. You need to reshort. So I reshorted again, faded it down to the 450 level right here. And I covered there thinking I was all smart that the previous day spike here was 450. So I'm thinking, okay, previous support or previous resistance will now be support. Hopefully it bottoms here and starts bouncing because, very few of these really fade all day. At some point they do offer a bounce, but I was just dead wrong. We faded, not only below 450, but all the way down to, 350, 330, 340. And this was the bounce, a very weak bounce that didn't even break 450. So, just left a lot on the table, did not take the size that this trade probably deserved considering how much it did fade. But, you live and you learn. It's not the end of the world.
So IDEX, this was my biggest winner of today. So this one's been on my radar for almost a week probably because similar to what I've been talking about with OTC breakouts the last couple of twist episodes, it ran up and it kind of went sideways and it was building support for like 5 or 6 days, like basically a full week. So I actually bought this into close yesterday because it was started to get closer to the top of this channel. The support level down here at like 108, 109, I began to trust a lot more because it's held that for several days. So I started into it here. Sure enough, the next day they had news, which has been a super common theme when these really start getting close to the breakout. So I was watching the 125, 130, and then also up here in the 144 levels because those were the breakouts. And I played this a couple times. This 15-minute chart, I'll just zoom into a 1-minute chart here. So I sold the swing into this spike because at that point I already made like 20% of my position. So I just got out some of my shares and then started going sideways here. And you can call this like an ascending wedge. But right underneath the breakout at 140, the top was at higher low after higher low. So then I got back in and that's when the craziness started happening. And we actually broke out over that 144 level. I sold some into the spike into the 160s. I think I added back on the dip here, back where it tested the breakout again, which happens a lot, especially with listed stocks. They're choppier than OTCs. OTCs tend to just trend straight up more, where listed stocks, a lot of the times you'll see dips to the breakout or below the breakout. And then I sold up here into this midday consolidation once, the parabolic spike kind of wasn't happening any longer. But I kept it on watch because at that point it was only like noon Eastern. There's like 4 hours left in the market. I was like, this probably is going to be a play in the afternoon. It's now on people's radars because it broke out. It held the breakout for several hours. So as it was going sideways into the afternoon, and again, just if you look at the overall trend, it's still trending up. We have a low, a higher low, another higher low. I started buying in towards 2 p.m., bought some shares back, and I actually ended up selling most into this 192 push because my first entry was around like 120. So for me, I was like, this is already up like $1 a share. It's up like 100%. Like I was like, this breakout's pretty awesome. So I just took the gains and moved on, locked in close to $6,000 on this one, which is incredible. But Jack somewhere around here sent some messages that was like, this thing's going to 250, and he pretty much nailed that. So that was pretty close to the top.
So my thoughts here were, it really created a nice support level there, neutralizing, and I joined that volume perk there, right where your mouse is, around that 175 level. And I just took a smaller position because I knew that the tape and the level 2 on this was just very aggressive, and there's a lot of sellers and a lot of buyers everywhere. So for me, if I'm taking a bigger position, I need to be calm with the action. And I knew I wouldn't have been calm with the action with all the buyers and the sellers. So I just took a small position. I already had locked in a bunch on the day just to kind of wallet pad there. And it just turned out to be a really awesome call. It just went straight up for my entry. And as I noted in Tim's room, I said, there's a huge offer at 190. And sometimes when I like to see that on these massive volume stocks, especially when it's that high day, because then that's going to get a lot of people to sell and a lot of shorts to join it. And there's just so much volume that you need to understand that volume overpowers everything. So that's kind of why I thought there would be some squeeze over 2, because a lot of longs are thinking, I want to sell this at 2. A lot of shorts are thinking it's up too much, but it just had so much solid support, and it was just such a great breakout chart. And I ended up selling a little bit too early on my long. I got out around the 220 area, but fortunately I then sold more. I sold short after the hard crack and lower high there around that 230 level. Matt, if you could show that on the chart. Yeah, those lower highs right there, I shorted about with the 225 average. So I sold it a little bit higher than my long. And I kind of just kept my stop at 240. And then once it started making those lower highs, I just kept moving my stop down to take advantage of how low it was going to go. And I kind of saw that it double bottomed a couple of times at $2. So a lot of people that were still long, a lot of stop losses at $2, and then covered into that washout at 193. We'll be keeping this on watch in the coming days. Me and Kyle will be looking for that first red day. Ideally, it goes higher, already gapping up a little bit after hours. Really good volume today. So, cross my fingers for a multi-day runner, but already extended enough to where if it's weak tomorrow, I might join small, short if I'm not too busy with other plays. Great name.
I want to make a little note real quick. Yeah, on the volume, when you were when you asked Jack about like how do you read tape, I wanted to make a little point here because this is a really good example where not only is it the tape, but it's also the volume in which how you could read a stock. So a perfect example is on IDEX here. The top of the day's run was the biggest volume candle, right? So you have to think about all the longs you chased, think about all the shorts who just got squeezed. And I mean, that volume candle is nearly 3 million shares, right? So whether it was a short taking a loss getting squeezed or was a long who just bought the exact top at 240, there's now 3 million shares who literally are the highest possible price of the day. And so once that happens, that's kind of a very key sign. You see that volume exhaustion of, shares exchanging hands. And that was a very key sign that the backside was in for the day. And that's kind of what led to then this, drawdown from, the 230s down to 180. So just a little sign right there.
Yeah, great note there, Kyle. I think we all had very good points on this chart. And this is just a very, very textbook play, offered many plays on it. Multi-day breakout. Matt got in, very early. I took advantage of the afternoon. Kyle also, pretty sure you shorted it into the parabolic as well, Kyle. So just a lot of different angles to play this kind of stock. And that's what I like when there's multiple plays on the stock, you can really compound your gains. And you're just getting a good read on the ticker because you're watching it so much. You don't need to be in a million things. You just need to be in the thing that you're reading the most clear.
Great tips, boys. Love it. The last one I'm going to share is AFH. This start of the day, sub $1, and sub $1 stocks have been hot pretty much for the last month straight. I have a scan. I call it the Robinhood scan. That's just being funny because a lot of people look for these sub $1 stocks because, they're cheap, they have small accounts, and they tend to run a lot. And this is an example. So this one I got off the scan either pre-market or, in the first 10 minutes of the day, I started seeing it. So I like to just try to capitalize on trends, especially on stocks that are trading just ridiculous volume. I'm long biased, so I'm always watching the dips. looking to scoop up shares on the dips and risk usually the previous low. So my first entry on this was around 10 a.m. on this dip. After it broke pre-market highs, the volume was really good. It was trading, 500K shares a minute, more or less. So I grabbed some here. And just when I entered around 10 a.m., I was risking this low. So my shares, I didn't have that many shares at this point in time. But then on this dip, on the next dip, about 20 minutes later, I added again, really focusing on adding on dips here. So that way I have a good average low risk, and I moved my risk up. So at that point, my risk was super small. I was able to get decent number of shares, and then it swiped up into a halt. And halts I'm not really comfortable in halts. So pretty much as soon as this unhalted, I unloaded all my shares because I was like, I don't know where this is going to unhalt. They're super annoying. And sure enough, it ended up being a good sell. But then I started watching it again, and once again, you see there's a low here, a higher low, another higher low, another higher low. And I think on this one, I ended up scooping up some more shares again because it was just trending. It was trending too. It
just keeps going
upwards. So I was like, I'll risk the previous low again, rinse, repeat, do the same thing over and over again. And I ended up selling into the 120s, 130s. And if you look at this chart, the same thing happened over and over again throughout the whole day. Right here again, you have a low, a higher low, a higher low, a higher low. And that's pretty much what I looked for, especially on these dollar stocks, sub-dollar stocks that are trading a lot of volume. Just higher lows over and over again, and look to scoop up the dips. And there's always a key risk level because, as soon as there's another lower, if there's a low that's lower than the last low, the trend's kind of shifted and you don't want to be in the stock anymore if you're long. So those are some key tips for me. This was I had no idea it was going
to. I was going to ask you too, how did you feel? Because the first, right when you brought up the chart, I actually didn't watch this ticker at all today, but right when you brought up the chart, I saw how many were just based on the volume and then the lack of candles in certain spaces. I was going to ask you, how do you feel about halts? But yeah, you nailed it. I was like, I'm the same way. I'm super uncomfortable. If they start halting more times than they're trading, it's I don't even want to deal with it. So that makes sense.
Yeah.
I'm a fan of the halts, to be honest.
Why is that?
Just because I feel like it adds so much volatility to it, and you just need to position yourself on the right side of the halts. And I just find it easier to read, and it gives you time in between the halts to think about your plan. So you can kind of just react. And whereas if a low float's just trading and it's not halting, it's just, you're going to have a harder time staying in the trade, I think, because the halts give you a break to reset and refresh, reevaluate your plans in the ticker.
That's fair. I would say the most useful thing for halts is just you can run to the bathroom. you get a 5-minute bathroom.
Yeah.
That's pretty much all they're good for me.
That's funny.
That's all the charts we had today. That wraps it up. Anything you want to add before we close out, boys?
I think a lot of good value in this episode, just talking about our plays today, just because there is a lot of opportunity. And we all trade pretty good. And if you just notice, all we're doing is just putting ourselves in good risk reward situations over and over again with daily chart patterns that we are familiar with. That's all we really do day in and day out.
100%. Rinse and repeat. Same thing every day. That's all I look for. So, yeah. Awesome, boys. All right, that's it.